Okay, I'm back. Thank you so much for bearing with me today. Actually, it was something I had to consult, but I couldn't consult it with you earlier. And anyhow, but I'm back, and let's just resume. Okay, so these are the examples which you did happen to talked about last time, and now moving ahead from here, we have a bit of T accounts that we have to discuss for now. And then we are going ahead towards as far as our fair value model is concerned. So let's just talk about that. I'm just opening my Excel so that I can make up the accounts over there for you so that you guys can have a look at the T accounts, and these are going to be really very helpful for you. And okay, so here's the Excel. This is the first account that we have to make. Okay, so this is assets cost account. Obviously, as it's an asset, it's going to have a balance brought down over here on the debit side, and balance carried down is going to be on this side. Then we have acquisition during the year. It's going to be on the debit side, and the double entry for this is debit asset, credit cash. As far as if we sell the non-current asset during the year, it's going to be called as and disposal, and the double entry for this is disposal debit, and we have to credit the asset. Now, this is the account which is going to be made according to the knowledge we have gained so far. So far, according to the knowledge, what we have read about the assets, about the cost, about the initial measurement, about the subsequent measurement accordingly, according to the cost model, this is the account that we have to make. Then the second account, it is going to be of the accumulated depreciation account. And this is going to be opening balance. Then we have the closing balance. Then we have depreciation charge for the year. Double entry for this is depreciation expense debit, and credit is accumulated depreciation. And then we have the disposal here, and the double entry for that is debit accumulated depreciation account, credit disposal. So these are the two accounts. The cost account is separate, the accumulated depreciation account is separate, and this is where the company is maintaining a separate accumulated depreciation account for the depreciations on the non-current assets. Then we have another account, and this is going to be the disposal account, which we have been discussing so far. So this is disposal account, and assets cost is going to be here. Its accumulated depreciation is going to be here. And this is the cost and the accumulated depreciation of the account or of the asset which we have just disposed of. Over here, we are going to have the cash proceeds. The double entry for this is debit cash. And we are going to have credit disposal. Then we can have a balancing figure here, or we might have a balancing figure here. Even if the figure is here, it is going to be of the income statement, or if the figure is here, this is again going to be of the income statement. Over here, if it is the figure, the double entry is income statement, debit, credit, disposal. Debiting the income statement means we have to deduct, we have to minus, and it is the loss on disposal. And if we have the balancing figure here, the double entry is going to be disposal, debit, and credit is income statement. Credit means add, right, or credit, and it is the profit on disposal. This is going to be the profit on disposal, and this is something we have read so far as our cost account basically permits us, right? This is the whole working which we have done so far according to this cost model. Now we have this second one, and that is the fair value model, regarding which now we have to talk about from today. The fair value model, the asset is reported at its fair value. And fair value is the amount at which an asset could be exchanged or a liability settled between able, willing parties in an arm's length transaction. Now, fair value is the amount at which an asset could be exchanged or a liability settled between knowledgeable willing parties in an arm's length transaction. Now, it's not necessary for a fair value to be the market value. In normal circumstances, we might or we can say, okay, fine, the market value is basically the fair value. But this is not actually true in mostly all of the cases. I mean, there is going to be a bit of a difference between the fair value and the market value. And the fair value is basically different from the market value because this is the value at which the transaction is basically triggered. This is the value at which we basically trigger the transaction, right? This is the value at which the transaction is triggered. So that is why it is going to be called as the fair value. For example, this is the value at which you are willing to exchange your asset. You know about the market because this is the knowledgeable willing parties. You know about the market, you know about the value of the asset, but again, you are still willing for execution the price or executing the price. And in an arm's length transaction in the market, the buyers and sellers are readily available. For example, you have a non-current asset with you, that is, like, we can have the example of a land, or we can have an example of a car as well. Suddenly, because of an emergency and all, you certainly need the finance, you certainly need the cash, right? I'm just explaining you the concept of the fair value over here. Okay, you need the cash, you have a car whose value is like around, if I am let's just say, whose value, like, let me write it over here for you. The market value of the car is around $80,000. The market value of the car is $80,000. Suddenly, you have an emergency where you need the cash. So you are willing to sell it for 70,000. You are willing to sell it for 70,000, right? Although the market value is 80,000, but you are still willing to sell it for 70,000 because there's an emergency and you need the cash. So that's why you are kind of selling it at a lower price. Now, you are selling it at the 70,000. I come in and I buy the car from you. I come in and I buy the car from you at the 70,000 value. Right? Now, look here. Both of us are knowledgeable parties. You have an idea, you know that your asset is worth for around $80,000. I am like, from the market, and I know that the asset is worth at 80,000. But you are willing to sell it for 70. I am willing to buy it for 70. And in an arm's length transaction, arm's length means it's a way of saying that the market basically the buyers and sellers are readily available, and the product is kind of being marketed at a price where the buyers and the sellers are going to be available easily, right? You don't have to go around, or you don't have to do make extra efforts in order to find the buyers or something. Okay. And then now take another example. Now let's just take another example. Over here you were selling your asset at a lower value. Now let's just change the example. For example, uh, you just buy a new phone, and your friend also buys a new phone, right? You both buy a new phone of the same category, or of the same company or the same model, right? But unfortunately, when you bought the phone, the color which you wanted to have for the phone was basically short in the market, or that color was not available. Now when your friend bought the phone, he by chance got the same exact color which you wanted. Now, you negotiate your friend to exchange the cell phone with you, and you say that you are willing to pay extra $300 over the value of the phone. Although both the phones are same, they both have the same market value, but you are willing to pay extra to your friend in order to get that particular color. In order to get that particular color of the phone, you are even willing to pay extra to your friend. Now, the willingness of you to pay extra to your friend just to get the phone is basically shows the fair value of that particular phone. That is not the market value. The market value is lower, but you are willing to pay extra, because you want to have that phone or something, right? So this is going to be classified, or this is going to be called as basically the fair value, right? So this is the difference between the fair value and the market value. And over here, talking about this, what do we have to do is we have to take into account the fair values, and the fair value model says that the asset is voted at its fair value. And then at each year end, what do we do? We basically check the fair value of the asset in the market, and then we try to report that asset's value over here into our accounts. Now, how the things work. For example, uh, the cost of asset is 100,000. The life is 10 years. After 3 years, the asset is appraised as having a fair value of 90,000. How will this be in accounts, assuming fair value model is used? Now, the cost of the asset is 100,000. The life is basically 10 years. And then after 3 years, the asset is now appraised as having a fair value of 90,000. How will this be reported in the accounts, assuming the fair value model is given? Now, how to report? In order to apply the fair value model, we are going to have a very refined, a very sound approach as far as accounting for the fair value is concerned, and that is going to be into a two-step approach basically. Step one, remember, calculate the carrying value of the asset at the exact same date on which the fair value is given. First point, calculate the carrying value of the asset on which the fair value is given. Calculate the carrying value of the asset on the date on which the fair value of the asset is given. Now, the fair value is given at the end of year 3, and that is at 90,000. The asset is appraised as having, after 3 years, the asset is appraised as having a fair value of 90,000. Done? So the fair value is given at the end of year 3. Now what do we have to do is carrying value of the asset at the end of year 3. This is something now we have to calculate, and that is going to be 100,000 is the cost divided by 10 years useful life. We get 10,000 depreciation charge, right? For 1 year. Now 100,000 minus 10,000 for 1 year into 3 for 3 years accumulated depreciation, we get 70,000. Done. We get the carrying value of the asset as 70,000. Step 2. Take the difference between the fair value and the carrying value to calculate the revaluation gain. Revaluation gain is fair value minus carrying value. The fair value is 90,000, the carrying value is 70,000, the gain is 20,000 over here. The gain is 20,000. Now the question comes, how to record? How are we supposed to record this? We had an asset, or we have an asset whose carrying value is 70,000, but the value in the market is at 90,000. So technically speaking, our asset has increased in the value of the asset has appraised in the market. So technically speaking, this is a gain for us. For example, you buy a piece of land, or you buy a house, and like after 1, 2, or 3 years, its value is increased, or the value goes up in the market. So technically speaking, your house which you bought previously is now reported at a higher value. So technically speaking, if you bought it for 100 and now in the market it is for like around 120 or so, you have made a gain on your asset for 20. Now the question comes, how to record? We cannot record the revaluation gain in the income statement because the gain is not related to operations and the gain is not yet realized. We cannot record the revaluation gain into our income statement. We cannot record the gain into our income statement because the gain is not related to the operations, because this is not the normal sale purchase of the business, or this is not the normal activity of the business, because of which we could have straight away went and recorded into our accounts. And secondly speaking, the gain is not realized yet. Now, what do I mean by the gain is not realized yet? Realized means you have not earned it yet. You have not earned the gain. Although the gain is over there, there's no doubt about that, but you still have to earn it. And now, what do I mean by you have to earn it? Technically speaking, you bought a house for 100. Now its worth is 120 in the market. Technically, you have made a gain of 20 on your house, but you have not yet realized the gain. I mean, you don't have the 20 in your pocket right now. You don't have that 20 which you have gained on your house is not in your pocket. You have not realized it yet. How can you realize it? Obviously by selling the property. If you sell the house, then you can realize the gain, the above gain, or the over extra, the 20 which you are talking about. One way is this, right? So technically, in order to realize the gain, the one option is that you can dispose of your asset and then you can realize it. Now, if it's not realized, if I'm not planning to sell my asset, then what? The gain will recorded as a separate item in the equity of the company as revaluation gain. This gain is going to be recorded separately into the equity as a revaluation gain. Then this is going to be recorded as a separate one as a revaluation gain. Okay. So this is a revaluation gain. Now, how to record? Obviously, we are already talking about that. How can we record this revaluation gain and all? And technically speaking, talking about this revaluation gain, that how we have to record it or how we are going to record it in our accounts or something. When we ask this question, we should have said that this gain is going to be recorded into a separate component of the equity. We have to record this as our income or something. Then technically speaking, we should credit the revaluation gain. Now, what to debit? We have credited the revaluation gain, but what to debit in our accounts? When we talked about what to debit in our accounts, let's take a look that how we got this gain. We compared the fair value with the carrying value, right? This is the market available, this is the value which is available in the kind of market or so, that your asset is like readily available for sale for like 90,000, whereas its carrying value is 70,000. And by comparing the fair value with the carrying value, you had the gain, right? By comparing the fair value with the carrying value, you had the gain. Now, what is the carrying value? This is cost minus accumulated depreciation. And cost, we already know for which or whatever for what amount basically we have got the asset accumulated depreciation is the depreciation of all the years, right? Now look here. I assumed the assets useful life is 10 years, right? That is why I calculated the depreciation charge of 10,000 per year, and I calculated the carrying value for 70,000. Now, let's assume the assets life is 20 years. It means 100,000 by 20 is 5,000 per year depreciation charge. So accumulated depreciation for 3 years is 15,000, and 100,000 minus 15,000 is 85,000. Compare with fair value of 90,000, gain is 5,000 only. I mean, I've just changed the life from 10 to 20. My gain has just dropped to 5,000 only. Now, let's assume the assets life is 5 years. 100,000 by 5 is 20,000 depreciation charge into 3 years is 60,000. Carrying value is 40,000. Fair value is 90,000. The gain or the revaluation gain over here is 50,000. The point of concern, I plus minus the useful life of the asset. My gain on that asset is plus minus. It means if I estimate prudently that the asset is going to be used for a less life, it is going to give me a huge gain. I assumed the asset is only going to last for 5 years. I got a big gain. And optimistically, I said the asset is going to last for like 20 years. my gain has reduced to only 5,000, right? So this is the estimation which is adding or subtracting my gain. So technically speaking, what has happened? That I estimated, and actually by having the useful life at 10 years, that my asset is going to have its value at 70,000 at the end of year 3. My asset is going to have the value of 70,000 at the end of the year 3. My estimation was my asset is going to lose its value by 10,000 a year has proved wrong, because technically the value in the market has increased. Now, what will I do? I will reverse my estimation. I will reverse what in the name of estimation have I recorded, and that is the accumulated depreciation. So what does it mean? It means I am going to debit accumulated depreciation over here, and then I am going to credit my revaluation gain, and the gain is over here for like 20,000. So 20,000 is going to be recorded here, and 20,000 is going to be recorded over here. So I have to debit my accumulated depreciation over here. Now what will happen after accounting for this? Now look, cost minus accumulated depreciation is equal to carrying value. Done. Cost 100,000. Accumulated depreciation was 30,000. I've reversed 20,000, and now I have the carrying value over here at 90,000. And this carrying value of 90,000 is actually the fair value in the market. Done. So basically, what I have done, we are option one to record it. We are reversing our accumulated depreciation. What does it mean now? If we go over here into our accumulated depreciation account, where we have the disposal, closing, and all, if we have the revaluation, then the revaluation gain is going to be recorded here if we are maintaining the separate accounts for the cost and the accumulated depreciation. If we are maintaining the separate accounts for the revaluation and all, guys, just hold on for a second, please. Okay, we are going to record the accumulated revaluation gain in our accumulated depreciation account as a reversal of the depreciation. This is what we are going to do on the basis of what we have read so far. Now, we had an assumption that the assets value is basically at 90,000. Done. If you look over here in this question. Now, option 2, the fair value is at 110,000. Now, the fair value is basically at 110,000. Technically, the carrying value is something we have already calculated at 70,000. The fair value is 110. So revaluation gain is for 40,000. Double entry. Debit. And as far as the credit is concerned, it is going to be revaluation gain as 40,000. Revaluation gain as 40,000. We are going to debit the accumulated depreciation. The total of the accumulated depreciation is of 30,000, and if any balance remains, it will go to the assets cost account as a balancing figure of 10,000 as far as of the whole double entry is concerned. So we are going to debit our assets cost account over here with the 10,000 as well. Done. Now, if I look the statement, the cost minus accumulated depreciation is equal to carrying value. The cost was 100,000. Accumulated depreciation was 30,000. So I had the carrying value of 70,000. Now what will happen? 100 plus, it is debiting, na? Its asset is cost account is debiting. So I'm going to add 10 here, and then 30,000 minus 30,000. I am going to have 110,000. Then the 30 is reversed because accumulated depreciation being debited means we have to reverse it. So I have 100 plus 10 is 110, whereas the depreciation is now, accumulated depreciation is now standing at 0. I'm going to have this at the 110,000, which is basically my fair value over here. Now, moving ahead again, now we have to go over here into this account and we have to write revaluation gain. And this revaluation is basically recorded over here into our assets cost account. These double entries are done where we have a separate account for the cost and the accumulated depreciation. Now, there can be a situation where we are not having the cost account or the accumulated depreciation account. We are only having the carrying value account. We are only having the assets carrying value account. In that case, what will be done? All else equal, the double entry to record the assets revaluation in the carrying value account will be debit asset, credit revaluation gain. We are going to debit the asset and then we are going to credit the revaluation gain. This is simply how it is recorded. Now, as we have talked about the assets carrying value account, let me show you this account over here. And this is going to be an important account as well, because mostly you're going to make up this account. And this is assets carrying value account. We have the balance brought down, just like the cost account. We have the balance carried down, just like the cost account. Then the additional point, we have the disposal here, disposal, and this is going to be carrying value of the asset being disposed of. Then we are going to have in the same account the depreciation charge as well, and this is going to be depreciation charge for the year. This is the depreciation charge for the year. This is the one which is added into this account, because this is the cost, this is the depreciation. When you minus the depreciation, you are going to have this closing balance as the carrying value. Look here, this is the cost minus depreciation, we have carrying value. So this is why it's called a carrying value account. And then the addition, if you have any acquisition during the year, this is going to be recorded over here on the cost, obviously, because on the cost we have to calculate the depreciation. And then we have the revaluation over here as well. So we have this revaluation over here as well, which we have just recorded. So this is the fourth account which we have to do, and these three accounts are really very, very, very important as far as solving your section A type questions are concerned, solving the section C type question is concerned, or even if you talk about the statement of the cash flows. These accounts are really, really, really going to help you, and these accounts are really, really, really required as far as the preparation of the F7 as a whole is concerned, because this is something which can be tested at any level, be it the section A, B, or C, because this is something I told you last time, that even if we only talk about the IAS 16, not the assets or something, if we only talk about the IAS 16, I can, on the basis of, I can, I'm not exactly finding the word in English. Uh, I can be very, like, I can be really very confident in saying that at least you are going to have the IS 16 in your paper for 20 to 25 marks. I mean, if I look at the whole of the paper, the weightage of the IS 16 is for like around at least 20 25 marks. This is something definitely for sure you are going to have, be it into the section A, B, or C, but this is something you are always going to have the adjustment for, right? This is something you are always going to have the adjustment for. Now, moving ahead from here, all we have to do is, now I want to go for the practice questions, and let me just open my exam kit with you so that we can talk about that as well. Okay, meanwhile, I'm opening my exam kit or something. Did you guys happen to contact someone at the academy to get you guys know the idea about why we were not having the class, or why our class was not started, till that time or something? Did you guys contact someone from the academy or not? Or you guys were just randomly sitting here and waiting for the class?
No, sir. I just
I,
sent it
s-
in the WhatsApp.
Okay.
I also sent a message in the WhatsApp. Then 5 minutes later, you start the class. I deleted the message.
Okay. Actually, the WhatsApp group was not created, and basically, the problem was basically my father is going out of country, tomorrow. Like my family, my father and my sister, basically they are going. So I had to, and suddenly, basically, they are going for the Umrah, basically, the religious activity that we have in the Saudi. So this is something they had applied for the visa, and this was still was kind of into the process or something. And suddenly, today in the morning we got the call that it's been approved or something. So they just wanted to go, and obviously, when you have to travel overseas, there is a bit of things or two that you have to get before going. So technically, I did happen to contact at the academy in the evening. Sorry, not in the evening, but in the afternoon. And I kind of asked about what can be done regarding the class. But as this is something, I was concerned as well, because this is not something we are into the middle of the session as well or something. This was the start of the session, and I didn't want to leave the class or something. But it was just a bit of a lack of communication at our end, not at yours, at our end or at my end, basically, because I was so much occupied at the stuff and things that I wasn't being able to keep a proper track or something. So that's why I had to go. And then I was continuously checking my cell phone, and I don't know why, since I last updated my phone, there is something wrong with the as far as the speaker or the the earpiece is concerned. I don't know, whenever I make a call or something, I'm unable to hear the voice, and secondly, the other person is not able to hear me as well. And this is the technically a glitch into the iPhone since the latest update. And then I had to come back to my car, because my iPod, AirPods, they were not being kind of properly charged, because my son was kind of using the cell phone. And what he did, he just opened up the AirPods as well, and they were sitting idle, and he didn't know that he had connected the AirPods, and the battery was all all totally drained. So I had to rush back to the car into the basement, but the signals were not strong over there. So it was a bit of hustle and bustle. But anyhow, I'm back. But again, I had to do some arrangements. Okay. Anyhow, but okay. I'm just looking at the questions for now. But as far as I've just been able to find one of the questions. Okay, let me show you this question. This is only the question for now, which I found as far as the revaluation is concerned. but still, we do have a question from the exam here. And this is question 31, that Auckland company purchased a machine for 60,000 last January 20X7 and assigned it a useful life of 15 years. On 31st March 20X9, it was revalued to 64,000 with no change in useful life. What will be the depreciation charge in relation to this machine in the financial statements of Auckland Company for the year ended 31st December 20X9? Now, this is the question that we have. Let me go to the my Excel. Okay. This is the Excel. Now, why the question is not copying? Okay, let me copy it again. Okay. So this is the we have the machine on 1st January 20X7, and on 31st March 20X9, the machine is revalued to 64,000. So now we have to calculate the depreciation charge over here in this. Now, as far as the depreciation charge is concerned, I mean, as far as we have read, let me just go back over here to my Word file. Let's just write subsequent depreciation. Talking about the subsequent depreciation, what do? The simple formula is revalued amount divided by remaining useful life. This is the subsequent depreciation. This is the revalued amount divided by remaining useful life. This is how basically you charge the depreciation over here on this. Done. And talking about the revalued amount, now we'll just go back to our Excel and look here at the question. Now, we had the machine on 1st January, the year ended 31st December. So from January 20X7 to December 20X7, December 20X8, we had 2 years for straight depreciation. Then the asset is revalued at 31st March. So technically for the 3 months, we have to charge the old depreciation. And then for the next 9 months, we have to charge the new depreciation. So depreciation charge for the year will be 1st January till 31st March. It will be 60,000 by 15 years into 3 by 12. Done. For the 3 months, it is going to be a simple straight calculation, and that straight calculation is basically going to be like 16,000, 60,000 by 15 years into 3 by 12, because this is from January to March. Then the asset is revalued, and it is revalued at 64,000. So from 1st April till 31st December, the asset is revalued to 64,000 divided by remaining life is something you have to calculate, because there's no change in the useful life of the asset now. So December 20X7, December 20X8, 2 years and 3 months have passed. 2 years, 3 months have passed. Remaining, like, let me write over here, 2 years and 3 months passed. Remaining life, total life is 15 years. So the remaining life is 12 years and 9 months. So we have 12 years and 9 months as the remaining useful life. Now, 9, if we talk about, that is 0.75 of a year, right? So we can write over here 12.75 into 9 by 12. This is something we have to do over here. Okay, so 60,000 by 15 into 3 by 12, then 64,000 by 12.75 into 9 by 12. So we have a total of 476, 4.7. Let's just round it off to 4765. So the depreciation charge is going to be 4765. This is question 31. Where is my activate? Okay, this is a fill in the blank. The answer is going to be 4765. Okay, the answer is going to be the simple at 4765. Done. I hope it's clear to you. If you guys have any question or something, you guys can ask me. Otherwise, we are good to go. Okay. Okay, it's good at your end. Okay, guys, I need a favor from you today. I hope you guys won't mind. I mean, it's just like something. It was beyond my control or something. I couldn't have it under my control. I hope you guys can understand that I will have to leave for today, at this time. But definitely for sure, next week on the Friday when we are going to have the class, I am definitely going to compensate this time as well into our coming next 1 or 2 classes. Okay, I hope you guys won't mind. And this is something if I could have something under my control or something, I would have definitely been would have planned or something. But as I've told you that I just got intimation in the morning that their tickets are final and all. So that's why I have to go with them for now. But definitely in the coming week on the Friday I am going to compensate a bit, and then in the next class we are going to compensate. Otherwise, what we can do, I asked the guy at the academy to make up a WhatsApp group so that we can have a direct link over there with each other, so that in this sort of an emergency like I had it today, I could have informed you on time, and then we can arrange up for makeup class or something. So either we can have a makeup class at some other day, or we can extend a bit of a time into our regular classes to compensate for the time being lost today. Okay. I know this is something a bit of what do we say as, I'm not exactly finding the word to say that this is a bit of a loss at your end as well. I totally understand it, but I know I didn't want to do this, but I'm kind of a bit stuck today.
Yes, sir, that's fine.
Yeah, thank you so much for the support and love.
Okay,
And
fine.
definitely I am going to cop it up with you. Okay.
And I
All you
think I
have to do
just have a question, sir.
what?
For the notes that you've been preparing in the Excel and Word, so how would
Uh-huh.
you circulate it to us?
I have uploaded the notes last time onto the Google Drive. Don't you guys have the access to the Google Drive yet or something? The links which are being shared with you.
We have the links to the notes.
Yeah, and I can see
You
on
have
the
the links to.
it's volume 1 uploaded.
Okay, let me just right now. Let me show it on the screen to you guys. Let me just give me a second. I just have to open the link
But there's
because yeah.
but there's no the Excel working.
There's no other Excel working. Okay, let me
Mm.
just see it at myself, because if there's no Excel working, then why not? Because I uploaded, I do still remember, after the class, I just sat and I uploaded everything last time, na? So where is it? Let me, the WhatsApp is basically opening on my laptop. For the meantime, I'm just looking over here because the guy from the IT did happen to send me the links, and then I worked accordingly. Okay, where's the guy? Okay. I am sharing my screen with the Google just to let me share my desktop. Okay, this is the only thing you guys are able to see.
It's just volume 1, sir.
It's just the volume on. You're not able to see the volume 2 as well.
No.
No,
Okay, and what about the exam kits? Are you able to see the exam kits?
No.
no.
No. Okay. Then maybe this is I'm not sure yet. Maybe this is something which is for me, but I did happen. If I go to the my drive, what's in my drive? Let me see over here. Financial reporting lecture 1 is over here. I did happen to. Okay, this is my stuff, and this is financial reporting lecture 1 over here. This was conducted on 22nd April. This was mine, right? This was our class. Then I had a financial accounting class as well. I did happen to upload this as well. And this is the financial reporting, lecture 1. Let me just, okay. Yeah, this is the notes from the class. Okay, I got it. Maybe this is something where I will be uploading, and then the guy from the academy, he'll be the one maybe who has a separate link for you for the access to something where the notes are being uploaded to you, because this is something I've just seen. Look here, this is basically my drive.
Yeah.
This is my drive with my login, right? This is not yours.
Okay.
This is mine, but I have uploaded just to make sure that I have done the case from my end. But this is something I guess maybe he has forgotten to upload or something. Let me just text him so that you guys can have it. And I know and I understand basically we didn't have anything to contact in between. Otherwise, I would have done it, or I would have taken care for it, way the very next day. But this is something which is now communicated to me, and I will definitely make sure that the notes are uploaded regularly onto the Google Drive so that you guys can easily access them. Okay, by
Yes, sir.
maximum tomorrow you will have notes. I will straight away call him on the way, and definitely will ask him to upload the notes. Okay.
Okay,
Thank you
sir.
so much for understanding. Thank you so much for bearing with me, and I know I am going to cop up for this lost time definitely for sure in the coming time. Okay. So thank you so much,
Thank
and
you.
see you next week.
Yeah.
Thank you. Bye.
Thank you.
Thank
Bye.
you. Bye-bye.